Hey everyone, and welcome back to another Sunday Scan. I'm Chris with Investors Underground, and every single week we go over the most in-play stocks, themes, and news so that you can get prepared for the market in about 20 minutes or less. So I'm at Traders for a Cause right now, which is the awesome trading conference that a lot of people are at this weekend. So that's why I'm filming from a hotel room, not my normal setting. I'm going to keep this a quick, short, sweet, and effective Sunday Scan. We had massive news over the weekend regarding Middle Eastern tensions. The U.S. did some strikes in Iran, and now basically the whole Middle East is in some conflict. So we're going to go over some of the knock-on effects of that, what stocks to really watch to see if they're in play, and then to go over a couple of strategies for dealing with mass uncertainty, because there's a lot of unknown variables here, and there's a couple things that can really help traders to stay on track as opposed to trying to predict exactly what's going to happen next. So before we get into all of that, I will give the disclaimer that I'm not a financial advisor and these are not buy or sell recommendations. Everything I'm about to talk about is for educational and informational purposes only. Before I start to really go over some of the chart share, I just want to say that Traders for a Cause has been an amazing event so far. I've been able to meet dozens and dozens of traders who watch Sunday Scan, who appreciate some of the preparation that we do. It helps them with their process. So it's been so great to meet everybody, and we've met a lot of traders from S&P Capital and some many other great places. So it's great to connect with the trading community, connect with a lot of people who put their passion and their energy into helping the community, and it's just been a fantastic weekend so far. So big shout out to everyone that we've seen so far, and we still have a little bit more of the conference left. So I'm very excited to see how the rest of the weekend goes. So let's get into some chart share. And the first thing I really want to go over is, of course, the Middle Eastern news is going to be the big, market volatility or the market catalyst on Monday. So I think a lot of people have a lot of assumptions going into Monday. And what I want to stress is that during times where there's great uncertainty, where you can have multiple outcomes, what I like to focus on personally is what could be in play. I don't want to just, I want to have some things that I have on watch for upside. I want to have some things that are on watch for downside. But really, I just want to know what will potentially be in play, because the market narratives haven't formed yet, because they don't have all the information yet. So what I'd like to do is just focus on the names that will most likely have increased range, increased volatility, and new narratives form around them. And then whether they go to the upside or to the downside, I'll at least be familiar with them, and I can make a plan either way. So that's a big piece of advice that I would give to people around big events where there's a lot of uncertainty, because you can have very different narratives form depending on a couple of things that happen over the next 24 hours or so. So as we get into the open on Sunday, or the open of futures and everything, we'll be able to get some more information. But I would expect that the market will have a lot of volatility as it forms those narratives. So let's get into some of the most in play stocks, themes, and tickers for the upcoming week. So the first one that everyone's going to be watching is USO. Historically, when there's been conflict in the Middle East, oil has spiked. However, we've had a big run up into this event. There's a couple of different ways that the narrative can form around this. One is that, yes, Iran might threaten to shut the Strait of Hormuz, and that could basically impact the global shipping supply of oil. But at the same time, if there is a large-scale operation that is essentially replacing part of the regime in Iran, then if the U.S. forces and if there's neighboring forces that are in the region, even if they announce that they're closing the Strait of Hormuz, can they actually enforce that? I don't really know. So there's a couple of pieces of news that are going to be major, on Monday and coming up into the week ahead. And so the Strait of Hormuz will be a big one, and that could have impacts on oil either way. If they can't close the Strait of Hormuz and you've already had a big run up into it, then it's possible that oil finds a local top around here, which is super counterintuitive to what a lot of people are expecting. And so you could have a massive gap up on Monday, and then basically that sets the short-term top. If people are pricing in the strait can no longer be closed, if people are assuming that oil flow will be more readily available, and if the U.S. can, control some of those supply chains. So there's a couple ways that it could really form, and we don't know yet. And so what I'd like to do is just have USO or oil and proxies on my radar because it could really turn out multiple different ways. So I just want to have a plan either way. What if we gap up big on Monday and then fade? What if we open up a little bit weak and let's say that they actually can close the straight? And let's say now there's issues with China. And so there's a lot of things that could happen. But what I know for sure is that I'm going to have USO and all the proxies on my screen on Monday, and I'm going to form, my real plans as those narratives form. But I just be prepared for any kind of outcome. Another thing that I want to talk about before I get into the rest of the oil names is that I want to still notice objective truths. So as we're going into Monday, there's a couple things that have held true so far over the last couple months, and I want to see if that's going to be changed. So the first objective truth that has been happening recently is that SPX and the market in general has been very range bound in that channel. Now you've had a ton of movement underneath the surface, but you still have that range bound kind of assumption. Are we going to break that range to the downside with this news? I don't know. I'm kind of assuming that the range holds for now, and then we're just going to have a whole new reshuffle underneath the surface. So, if we do start to break a range to the downside or to the upside, anything is possible when you have major events like this. But I like to at least be familiar with what the market's been doing in general, because I don't want to assume that we're going to have this big downside flush or this big upside breakout if we've just been in a range, because we could just continue to do that. So that's something to pay attention to. And the next thing is the VIX. So obviously this prices in, 30-day forward volatility for the market in general. It's a good proxy for hedges, how bearish or how, volatile the market is priced to be. And so you have to see how the VIX reacts to some of this news on Monday. There's many, many different ways that it can play out. If the U.S. and other allies in the region seem to have control of the situation, if other people are not escalating the situation, like if Russia and China are not escalating, then you could have a kind of max panic moment on Monday, and then that's it. It kind of calms down, and the VIX actually comes in. But if you have strong words or threats from any other major player, then you could have the VIX start to continue up. And then also, I always say during times of conflict, which is a very unfortunate reality, is that you have to be aware that black swans can happen if you have countries that are really at war with each other in certain ways. You can't price out the fact that something random or something spontaneous that is destructive could happen at any time. So you have to have your guard up. Even if the VIX starts to fade, just have that in the back of your mind that during times of conflict, really anything can happen. So back to the oil names, a couple other names that have been trending up and have some nice charts are things like INDO. And so I know a couple people like NCAS in Investors Underground has some nice swings on INDO into the weekend. And so something like this is expected to really gap up on Monday. But I will say this, a lot of times with these small cap oil names, unless you have sustained price action to the upside in oil itself, many times these companies gap up a certain amount. It can be a pretty significant amount, but then they often stall out. And so it's something to be aware of, that you could have a big gap up into a prior level, and then that's it. And it could actually make for a nice fade on the short side. So it could be a massive gapper on Monday and then putter out and start to revert back, because of course, things like INDO, they're not actually going to benefit long-term from any kind of conflict, because most of the time these companies don't really have a whole lot going for them. And so it's more just short-term, traders getting in based on the price action, based on the history of the stock. So I think that could be something to really be aware of in the week ahead. And so kind of on that topic, I'm going to get into the main watches. This will be the first one. So on watch for that big gap up and possible fade if oil stalls out. Another one to watch is XOM. Yes, this has a nice chart. Yes, it's been breaking out, but if a lot of this has been kind of priced in, some kind of conflict coming in Iran, and now you have this big move up, if it starts to stall, if oil starts to stall, be aware that it can have a mean reversion if this was kind of all the hype leading into this event. So we just have to see, and we don't know yet. Will the Strait of Hormuz actually get closed? Will oil actually continue up? Or do we have a big gap up in oil, and then that's kind of it, like a local top for oil? Because again, the U.S. is putting out a lot, and the allies in the region and things with Venezuela can also increase oil production. So it's not a clear-cut situation that just because there's conflict in the Middle East that oil has to continue to rise. That's not not the case at all. It can if factors kind of confirm that, but just be open to the fact that some of this was already priced in, and you are in a vulnerable situation where if you start to break underneath, some of these recent levels, you can definitely have a big mean reversion there that a lot of people are not expecting. Or, if you do have sustained oil prices to the upside, then of course that these can continue. So just unwatch for two situations. Again, I just want to have things that are going to be in play, even if I don't have a strong bias either way yet, because the narratives haven't formed. A couple other things. Very similar situation with LMT. After conflict, almost everyone is going to be watching for what are defense names doing. They start to pile in as they assume more defense spending, everything like that. But what happens if it was more of a contained conflict? What happens if all this run up was anticipating that, and now you really have a local top? As if the situation is under control in some ways, what if that kind of caps like the near term conflict? What if there's less conflict in the Middle East going forward? Again, we don't know for sure. So just be open minded to either of those situations where, yes, of course, LMT could have a massive gap up on Monday, but it could also fade right back and actually be a trend change. We don't know yet. So that is another name on watch this week. Same exact situation with something like FRO, which is a shipping company. Again, this is around global shipping routes, prices spiking into that. And we just don't know if Iran has the ability to close the Strait of Hormuz and actually disrupt trade, or if the US and allies are actually in control of that situation. And, you could have shipping prices plummet as they price in safer shipping routes and trade all around. So again, just being very open minded to either situation. TLT, which is a proxy for the 20-year bond. So a lot of times during conflict, bonds are bid, and then you also had some recent news, just basically with the AI disruption theme. Sometimes bonds were a little bit more bid than normal. So bonds are a good proxy to watch, especially for conflict, because after a run up, you can see if that sustains. That can mean that there's more demand for bonds or safe havens, and then equities could possibly under pressure. But it also could be that if that was max, safety buying, if we get a gap up on Monday, and now you have tensions start to ease a little bit, you have the VIX come down a little bit, bonds could actually fade a little bit with that too. So again, keeping an open mind. And of course, the same thing applies to GLD. So GLD, SLV, we've had some great biases on this recently. And of course, the miners, the silver miners specifically, have just been a fantastic kind of swing thesis from these lows after the silver correction. And we all know the reasons for that, because the miners are in a different cycle than the metal itself. And because as the metal trends higher, even after a mean reversion, the margins and the revenue and the earnings per share are still exploding for all these companies. So it's a little bit different now because we're starting to get another run up higher in gold and silver, and not just for conflict reasons, because yes, I'm sure that gold had a run up kind of anticipating some of this news, but you also had a very hot PPI print. And so that's basically related to inflation. So if you start to have inflation come back a little bit, then that again usually pours into the metals as it's pricing in that inflation narrative. So just a couple of things to be aware of into the week ahead, that most likely precious metals will be in play. We don't know if it's going to be mostly driven by the inflation theme or if it's mostly going to be driven by the conflict theme. But what I do know is that after some big mean reversions, these have had some time to digest. And now you're just seeing kind of a move back up to some more normalized levels. So another name on watch for me is going to be Baba. So again, we don't know how the situation is going to play out, but if you have some hostile comments from China, there can be a lot of uncertainty there with US-China relations, because China obviously has closer ties with Iran. So you're coming up to some big technical levels here. And if people feel less comfortable about investing in China while there's some trade tensions, while there's some world conflict tensions or some geopolitical tensions, then you could really have some nice unwinds in a name like this after you had it trading sideways for so long, and a lot of people still in here long with a higher average. So that's something to be aware of if we start to break and act heavy to the downside. Palantir is an interesting one. So we actually had some news about Anthropic and the government in the US having some issues. I think part of it was because Anthropic was not totally willing to let their technology be used for some defense purposes. And so in response, the US government was basically like, you're not going to be, the main pick anymore for our defense capabilities. We're going to partner with other people like OpenAI or others. So I think at least part of the reason why Palantir was down is because a lot of the software stocks were pricing in disruption from AI. And so if you had Anthropic kind of pricing in, it's going to take part of Palantir's lunch. If Anthropic is no longer kind of the go-to for the defense, then you could potentially have some nice reversals in something like Palantir as it goes to the upside. So again, looking at key driving variables of what was impacting something on the way down. And then once those factors reverse, you could have the stock reverse with it. So if Anthropic fears were helping to drive this down, once you have that stabilized and now that Anthropic and the US government are at odds, you could have favor go back into Palantir after a big sell-off. So something to be aware of. And the exact same thing for things like cybersecurity names. Again, if everyone's pricing in Anthropic disruption and now Anthropic is not going to get the same kind of government contracts, it's not going to be able to spill into the economy in the exact same way, you could have some really nice bounces on this. And you even have some setups on things like CRWD because they have earnings on Tuesday. And so if you have kind of a key driving variable change and you have an upcoming catalyst, let's say they have really great earnings, and now that disproves not only is it not so much of a disruption name anymore, but now they just had a great quarter and everyone's already been flushed out. So you could have some big ramps on that. Again, these are just ideas of possibilities. They could have, terrible earnings. We don't know, but they're just on watch because I think that they're going to be very in play this week. And a very similar situation for PANW. Again, cybersecurity names down on disruption fears into some support now. So if it starts to, bounce and get light, then that could be a sign that it's responding positively to some of those Anthropic headlines. But if it starts to act heavy, then, it could break some of the support. But again, we just have to kind of wait for the narrative to form and look for the technicals to confirm. A couple other things. So now that OpenAI is going to be doing more government contracts and kind of taking part of Anthropic's lunch in that arena, you have to see, okay, is OpenAI getting more secured funding now if they're getting more government contracts and everything like that? And so if part of the reason why Oracle is selling off is because so much of the backlog is from OpenAI, if OpenAI is now able to raise money in the AI space, if they're getting government contracts, does that mean more stability towards Oracle? Could that cause some kind of a sharp bounce in that name? Again, we don't know yet, but that's going to be something on watch. If it stays very heavy, then that could be a sign that it's more maybe private credit fears that's spilling into Oracle rather than Anthropic or OpenAI and its funding abilities. But if it was partly, OpenAI not having stable revenue and now it does with the government contracts, then that could be something that could spill into Oracle in a positive way. So that will be on watch into the week ahead. NVIDIA, big sell-off after earnings. Again, solid earnings. This has just been in a range just like SPY. And I think you had a ton of call options of people anticipating great earnings on the CapEx guide up on a lot of the large tech names. So I think you just had it very call heavy on a day when the market was weak. And so you had some massive sell imbalances in NVIDIA that basically just took it to the bottom of this range. So does it start to stabilize from here and bounce after all those, calls are cleared out and now you just have it sitting at the bottom of a range and now it's clear to run? That's a possibility. But if it starts to stay heavy or break under these levels, I think that actually a better go-to will be Avgo. And so you have a name that's kind of related in the same sector, and it's been kind of trading underneath this channel level, or at least testing the bottom end of that range. So if you have a bunch of longs in here, and if you have the AI space start to get heavy, that could be on watch for downside. Again, no hard bias. I'm just looking for possibilities. If the AI sector is super heavy with NVIDIA, I want go-to names that have the technicals and ideally a recent catalyst to help take it lower. But if not, then it might just stay in the channel. Another one that's in play is this EWI. So I've actually heard a lot of traders here at Traders for a Cause, interested in fading this potentially, looking at the South Korean index, seeing how much it's up. And of course, yes, it looks like it's up a large amount in percentage terms, but there's a couple things that I want to highlight here. One, the reason why the South Korean index is up so much is because guess what is a huge part of their economy and their index? That is memory and memory sector names. So names like Samsung, things like this, where you've had the most extreme bottlenecks in AI, they have been a huge beneficiary from that because that is the majority of their market share, in impacting the index. You could have 60 or 70% of the moves in the index all from that memory theme. And so what would I look for before a fade in something like this? One, counter trend news, where either the memory names like SNDK, MU, and like the proxies for that memory space all start to come in very heavily. And maybe you had like bottleneck news or bottleneck resolution news that there's some kind of light at the end of the tunnel for the AI memory bottleneck, situation. But so far, I'm not really seeing that. And so if you don't have absolutely extreme technicals, I'm more cautious about trying to fade something too soon. Because what can happen is just like with silver, remember when that was very extended, but if you look at this, it's actually pretty much in a range. That is normalized action for a very strong theme and a very strong index based on some of those recent factors. So don't get too eager to try to fade something like this unless there's counter trend news, or secondly, if it starts to go truly parabolic. Again, this is all mostly normalized priced action for the last couple of months. And so if it starts to go absolutely parabolic and a rate of change started to increase heavily, then that can make it more vulnerable to a mean reversion trade. But until a true parabolic based on change of recent action, or you have counter trend news, I would be very cautious trying to step in front of this, because otherwise it's going to be the exact same thing as silver, and everyone gets chopped up and they miss the actual trade because they're so focused on trading it just because it's up a lot in a short amount of time. That's not the only variable. You have to look for counter trend news or a true speed up in technical price action. So that is going to be on watch for the week ahead. And the same thing really applies to MU and SNDK. Again, you've had these names kind of consolidating for the last month. But if you don't have counter trend news, these might just start to build up again. But if you do have it start to stay heavy and start to break these levels, it could be more like a bear flag, or especially if you have counter trend news, you could have some breakdowns there. BE had a really nice breakout over the last week, but again, the market was pretty heavy. So almost every time the market's heavy, BE stuffs in that action. But you had a nice breakout to the 180 level, and went to blue skies, went to all-time highs, and that's a great sign to see. But again, if the market's heavy enough, it can kill most of the momentum names and bring them back down. So now this is just kind of consolidating towards the upper end of that range, which is totally fine. Still have the swing position on here, that we've had on for the last couple of months. So still everything intact with BE and still looking pretty good. But if the market gets heavy enough, then it can just kind of go back to a consolidation phase. Private credit, there's definitely issues in there. We highlighted BX and a couple other names like OWL and APO and KKR last week. And you've really had that theme start to accelerate. You actually had some bearish news with APO in general. Some of their private equity funds, started to cut dividends and assess the credit worthiness of some of their holdings in there. So definitely some issues with that. And that, again, could be something spilling over into the AI theme. So that's another reason why something like CoreWeave or something like NBIS or something like even Oracle, if they're tapped into that narrative, they could be negatively impacted continuously, as long as that is a key driving variable, which, it's part of it. It might not be the full thing, especially for something like Oracle, but these names are still on watch to the downside until you get market stabilization and you get a repricing of all these moves. And then the last one I want to go over is related to that theme. You have some bank names like Goldman Sachs that have private equity exposure and investment banking exposure starting to roll over. So if the market gets super heavy, and if you do have a bad scenario, in the Middle East, if tensions are getting, out of hand, if the VIX is going crazy, and you have, some concerns with private credit, then you can have some major unwinds in banking names. But if the market stabilizes, financials are a huge part of that. So, just have to be a little bit open-minded. So those are all the names I want to go over for today. Again, I hope that was helpful. I know that this was a quick run through. We had a lot of names on watch, but the main takeaway is that there's a ton of uncertainty. It's okay to just have names on watch, form two plans based on what the narrative ends up being, and then just have a lot of things that potentially could come into your wheelhouse, whether it's joining a trend, whether it's fading, something that's a sell the news event, whether it's a mean reversion trade or a counter trend catalyst. There's just a lot of things on watch. So that's all I have on my end. I hope that everyone has a great week ahead. Stay safe out there in the markets, and we will see you in the week ahead. Take care.